What is up, everybody? Welcome to another week of a rousing Monday market update. I am joined today, as with every week, by the man whom Jerome Powell calls every night to have him read him a bedtime story. Koenig is his last name, which means king in Old German. He's the king of our hearts. He's the Sultan of Secondary. He's the Mac of the rate stack. He's the taste tester of each investor. He's the Baron of Bips. He's the Titan of the 10-year. It is Austin Koenig. Welcome, Austin.
Thanks, Sean. I really appreciate the nice intro again. Even after I'm already 0 for 1 on my predictions from the last week, obviously. But
Oh yeah. A lot of people were. I will say that the man, the legend that won, Thomas Meister, is part of the Atlanta branch. He was only off by $1,000.
props to Thomas on that one. That's I don't think I think you can make that up. That's just being an expert. That's just
That's just knowing
that
your craft.
yeah. It's honestly a testament to you. You're running a tight ship. You and Ben. I mean, good lord, you guys are developing the next market experts here.
That's right. That's right. Well, welcome. How was your weekend?
It was good. It was good. Obviously, it's getting cold up here in Philly. I think everything is going well though, and we had the office Christmas party on Friday, so we just had a nice relaxing weekend here. So it's been great. How are you?
Yeah, yeah, fantastic weekend. Nice and relaxing. A lot of World Cup. I'm a big underdog fan in all walks of life. So there've been a lot of good underdog matchups. Unfortunately, none of them won in the round of 16. But Japan Croatia should be a great match today, starting 2 minutes ago. So that should be great to have on your third or fourth monitor for you third and fourth monitor aficionados. So let's besides the World Cup, let's talk about what happened last week. Tons of stuff happened last week. I knew we knew like PCE numbers were coming out. We knew jobs numbers were coming out. We knew Jerome Powell was going to speak, but I don't think any of us saw such a big move. Tell us what happened, how everything interacted to arrive at where we're at now.
Yeah, it's actually a testament to kind of what we've been saying for a while is we can have data all we want and we can have what we think might happen, but what the Fed says is what the market will listen to. And there pretty much was just a long, long speech Jerome Powell made, and it really at the end he really kind of gave I guess the kerosene on the spark of the fire in terms of any sort of like, hey, there's hope for a Fed pivot. And what he kind of mentioned at the end was that in December they will take a look at slowing these rate hikes and essentially alluding to a smaller rate hike that'll happen. What that small rate hike will look like is 50 bips. Very very small compared to what we've seen or what we've gotten used to, right? 50 bips in any other vacuum is still a big rate hike,
Right, right.
but we're living in a different time right now. So obviously that's something the market likes to hear. It's basically kind of alluding to the Fed's paying attention to the inflation numbers that are coming in, and that they're kind of shrinking in a sense. One thing that we should also pay attention to though is some of the other things that came out with like data with jobs numbers on Friday. Jobs numbers actually surprised to the upside. So there was really two jobs numbers that came out. Was ADP, which is the privately run one, and that one actually was like on the lower side, a little bit more disappointing. But so maybe good news for the market. But
Mm-hmm, mm-hmm.
when we're talking about the jobs numbers that the Department of Labor, essentially, or Bureau of Labor, whatever you call it, they release on Friday, the first Friday. It's a big fixed income date. So every first Friday of a month, always circle that on your calendar. Um, that was a big surprise to the upside, and they even revised previous months up as well. And so
Jeez.
that's one of those things where wasn't a good story for a rate cut. However, I think the market kind of just decided we're going to kind of believe Jerome Powell here, that they're seeing the inflation weakness, starting to actually come to fruition. Um, with all that being said, too, I think you have to pay attention to wage data too. Wage data actually was fairly strong as well, and so that's something that could help sustain inflation at a higher clip essentially. So we'll see how the Fed interprets this when they talk after the meeting. But I think it's kind of a lot of wait and see now as we kind of approach this week.
Yeah, yeah. Wild time in the market now. Okay, so wages went up, jobs went up. That's bad news. Like, it's basically if those keep going up, right? Like if there's more and more jobs being created, puts upward pressure on prices because there's more money to be spent. Is that pretty much why we like the market isn't liking the strong jobs numbers?
Yeah, exactly. So it's kind of like thinking about how, yeah, if there's more money to be spent, the demand part of the equation that the Fed's trying to fight is a little bit harder to fight, or they haven't won that battle yet. So I think that's kind of exactly the way you're looking at it is a very easy, simple way, and it's exactly right.
Is there any, so this is, I guess this is what people have called soft landing, but like is there any chance that we get inflation under control without unemployment numbers like ripping up? Like maybe we see a slight uptick, but like or like is it really job growth and wage growth that is driving inflation right now?
So I think when it comes to threading the needle or soft landing, it's really is a thread of the needle. I would say it's a tough thing to actually accomplish, all things considered. It's kind of like the fight scene in the new Top Gun movie. Like it's almost impossible, but hey, like guess what? We might be able to do it. Um,
Is
it's
Jerome Powell really Tom Cruise though?
Uh, I think a lot of people doubt that possibly, but here's where and I don't know if we should give Jerome Powell all that credit, but what we should say though is they're trying to hurt demand, and they know jobs are probably going to come at the sacrifice, right? Because there's two things they have to regulate, right? The pricing of your everyday basket of goods, and also making sure the economy is running at full employment, which is about 5% unemployment. The thing that I think we're making sure we're seeing one thing kind of start to improve other than like before we start to see jobs weaken. That would be great if we can kind of just get everything under control and just perfectly at the end of next year we'll be in a perfect equilibrium scenario. It's tough to say that's actually going to occur. I think what will happen is we will have a lot of inflation start to tick down. But if we start to cut too early, the Fed doesn't really want to kind of keep on going back and forth between the two policies. I think they want to measure twice and only cut once, essentially. And they really want to make sure when they are ready to cut the rates or start to provide a little bit easier money, that everything's pretty much good to go on the inflation side of things, because they know increasing demand when there are still high prices is not exactly a cure to inflation, and we could have a more extended problem. I think they want to just really kill it initially, and then pick up the pieces later, kind of like Volcker did. I don't think they want to be as harsh as Volcker, but I think that's a good precedent to look at. And Volcker really went hard, but it
Sure,
did
sure.
end up getting inflation.
Because like the undergirding of the economy is strong, right? There's no bubbles, there's no credit issues. It's not like there's anything that's collapsing. Like if we have higher inflation, it's just or higher unemployment, it's because money became more expensive to borrow and people can hire fewer people. And it sounds like they're willing to overcorrect in that direction because they know the underlying economy itself is in pretty good shape. So interesting. All right. Well. An exciting week last week, and what's coming this week? I know we have a lot next week. Is there anything between now and then?
I would say just keep an eye out for the jobless claims data. That's always something that's kind of it's a little bit of a more important data piece that comes out once a week. I think that's actually on Wednesday morning this week. We'll get that. Seeing how that continues to either go up or sustain jobless claims is also something that we should keep an eye out for. And we have the PPI, which is like the producers price index that comes out at the end of the week on Friday. So
I
that's
love this.
really
I like this like a new inflation measure every week. It's fun. It keeps us in a job, right? At the money
yeah.
market update headquarters.
Oh yeah, we have a stack of papers every week to go through on Monday, which is great. And so we have that obviously, and then CPI is on the following week, right before the Fed releases their rate decision. So
Wow.
next
And
week's
how quick does the
topical.
Fed react to things like that? Like once CPI comes out, are they going to adjust what they say the next day to what,
So
or are they getting advance They probably know a little bit in advance of us, huh?
yeah, so they really kind of meet for 2 days altogether,
Hmm.
and they will have a meeting on the day that CPI is getting released, anyways. So they'll have that to talk about. They won't say anything to the public on that day. They'll let the market decide for itself how it wants to react, and then the next day is when obviously the rate gets released. I don't think CPI goes one way or another. I don't know if that'll really move us up to 75 bips or bring us to
Sure.
25 bips or something extreme. I think 50 bips is fairly, I'd say, comfortably priced in, and you probably shouldn't think about anything else. If we did see 75, that would be a market reaction to the upside
Man,
of
that would
like
be,
rates going up.
yeah.
So I think we'll definitely see that if that occurred, but I wouldn't put too much stock into that. It's more just so how do we see sustained plans from going, after December? What's next year got in store for us is kind of what more December is going to help paint a picture of, and we would like to see Jerome Powell kind of touch on that a little bit too.
Interesting, interesting. And what's your? This isn't part of the competition, which everybody should participate in. What is your guess for CPI? Last month came out at 7 on the no 6.8. What was it?
No, I think it was like 7.6. Let's do some real quick research. So I think it was yeah, I think 7.6 is what we had.
Was it?
But or
Man,
I think it might have been 7.7. Yeah. So I think what was expected at 7.9. Let's say that we're
that's right.
getting
That's
to
right.
below that. I'm going to say 7.5 or 7.4. So let's just go with 7.4. Let's go with that. I don't know what the expectation is. I'd have to double check what that is actually being expected. We'll talk about that next Monday. But I think that's probably a gut feeling of where we might end up. But we'll see.
Yeah, yeah, and it's something you mentioned last week, which I hadn't thought about, is that these are 12-month rolling averages. So not only do you have to think about like what this month over month inflation number is going to be, but also what month is falling off. Like, was December particularly, or November, whatever, particularly bad last year? If that was like a 9 point something or whatever, and that's falling off, and it's being replaced by a 6 point something, like it's going to have a much bigger effect than if it was a smaller inflation number. So we'll start seeing bigger and bigger inflation numbers falling off the back end of the trailing average as we progress through 2023 and lose some of these 2022 months. So
Hmm.
I'm excited. I think it's going to be good news. We've obviously seen on the originator side that the market and buyers are pretty willing. That they were not stoked about high sevens. They didn't like low sevens. They were on the edge of being okay with the mid to high sixes, and now we're seeing a lot of appetite in the high fives and low sixes, and people are pretty willing to accept the fives and sixes. If we started saying like high fours, low fives, like it's gonna that's exactly where in 2019, 2019 was the best year of most loan officers' lives until 2020 and 2021, and rates were going up. Rates were going up for a similar reason to because the economy was heating up because the economy could take it. And nobody out there, like it sucked. Like there weren't any more refis on the table, or there weren't as many. And it sucked quoting 4.25s and 4.5s and 4.75s and even some low fives and stuff like that. But like nobody really cared. I made more money in 2019. I helped more homeowners. I went to bed with a clean conscience every night, offering people rates in the fours and fives. And I think we've seen that the American homeowner is more than comfortable buying houses with interest rates in the fours and fives. And like you really see that like the interest rate isn't contributing to huge monthly payment numbers, which like in the sevens and eights it was getting pretty like eye watering.
Oh yeah.
So pretty good news for us. We're headed in the right direction, and like I'm expecting with the amount of pre-approved buyers we have, and then the appetite for uh, you know rates in the fours, fives, and sixes. Like I'm expecting a huge spring selling season here in Atlanta. There's a lot of pent up demand, and still not a ton of inventory. So I think prices should stay good. I think demand should be high, and I think people will get used to the new normal, especially like after flirting with sevens and eights. People are going to be counting their lucky stars. They're not getting that. They won't be complaining about not getting twos. They're going to be like thinking, that they're not getting sevens and eights. So that's my loan officer expectation, and we're gearing up for a huge spring. So all right, well, thanks so much for your time. We'll talk a little bit more about mortgage-backed securities next week. We'll get amped about the Fed meeting and CPI numbers, and do like the equivalent of a rain dance for low CPI. And a soft landing. So thanks as always for joining us, sir.
Of course. Thank you for having me. It was great great talking. Next Friday as well, we'll have a capital markets Q&A. We'll have a special guest,
right.
Matt Anderson, and we'll talk a little bit more about credit unions. He comes from credit union background, and I think it's going to be some great perspective. Also, we'll talk about everything that happens after the Fed meets and everything like that. But just keep an eye out for that. We'll remind you guys next Monday as well. But thanks again, Sean, for taking the time. It's always great talking, and hope you guys have a great week.
All right, let's go crush some locks, guys. Have a great day.
All right, see ya.